What's up, everyone? My name's Robbie. This is Robbie and Manila, and today we're talking about how to create a 3-fund portfolio with Fidelity. Quick recap, why do you need a 3-fund portfolio? Well, first you have diversification and asset allocation, meaning that you have access to a bunch of different stocks because you're invested in ETFs that invest in stocks, and also a bunch of different bonds because you're invested in ETFs that invest in bonds. It's also very cost efficient because Fidelity's funds are extremely cheap. You're going to have a very cost efficient portfolio of just 3 different funds. Other things are that it's really easy to set up and it's really easy to track. You don't have to go find tons of different stocks to invest in. You don't have to find tons of different bonds to invest in. You only need 3 different funds and there you go. And so on top of all of these things, the thing with Fidelity is really its ability to have extreme cost efficiency setting up a 3-fund portfolio, and it's probably going to be the cheapest way out of any of the brokers that you could potentially have a 3-fund portfolio. And so why is this going to be the cheapest option between Vanguard and Schwab and other brokers? Well, let's roll the intro and let's figure it out. Okay, so let's go ahead and jump into the computer. Now, please, also, before we get started here, hit the like button. I really appreciate that. It really helps my channel, so thank you in advance. So let's go ahead and kind of figure out why you would go with one of these different 3-fund portfolios. So the first one I have here is a 3-fund portfolio with Fidelity investing in index funds and investing in Fidelity as your broker. So we're kind of going through 2 different routes in this one. So first is you actually have a Fidelity account and you're also using Fidelity's funds to make a 3-fund portfolio. There's another option. Let's say you have a Charles Schwab account, TD Ameritrade account, a Vanguard account. You can still use the Fidelity funds in those brokers to create a 3-fund portfolio, but there are limitations, and I'll show you what those are when we get to that. The way to make this the most cost effective with Fidelity is to invest in Fidelity and then invest in Fidelity funds. And so here's what we're going to look at. So the index funds, the 3 funds that we're kind of going to go over here are first FNILX. So this is called the Fidelity Zero Large Cap Index Fund. And now here you're going to see why this is going to be the most cost efficient way to create a 3-fund portfolio. It's because it's got a 0 expense ratio, literally 0. Doesn't cost any money to transact to buy the index fund. There's no commissions to be charged from Fidelity. They also don't charge you any fees when you have money in the fund. You're paying nothing. You're just investing your money with Fidelity in this Fidelity Zero index fund, and that's it. So what you're going to do is you're going to have 3 different funds. Now 2 of them have literally no expense. So that's FNILX and then FZILX, which is the Fidelity Zero International Index Fund, which is another 0% expense ratio. And then we have FXNAX, which is the Fidelity US Bond Index Fund, and then that's 0.025. So also, extremely low. 0.025 is like nothing. It's 2.5 basis points is another way to say it. And it's extremely cheap. So these are the 3 funds that you can use. And so let's kind of think about this real quick. What are you getting? Well, let's take a look at this pie chart. So here you have a hypothetical asset allocation for these 3 different funds that you're going to use for your potential 3-fund portfolio with Fidelity. So this is hypothetical based on, for example, if you want an 80-20 portfolio, meaning that you want 80% in stocks and then the other 20% in bonds. So you can see here that the FNILX, the Fidelity Zero Large Cap Index Fund, has 60% of this whole portfolio. So 60% of all the money in the portfolio is in this one fund. Then the Fidelity Zero, the International Index Fund, is 20%. So you're going to have a portion that's in both domestic and a portion that's going to be in international. That way you're really diversified. So you have exposure to some companies that are outside of this area, outside of the domestic stocks in the US. So if for some reason companies abroad do better than they do in the US, you can still get some potential returns via that. But then, of course, if domestic does better, then you have the returns for the domestic stocks. So you're properly diversified. And then you have bonds depending on your risk tolerance. And so this will depend on how risky you are when you invest. So how do you figure out what your risk tolerance is going to be? Well, I suggest that you take a risk tolerance questionnaire. And what I'm going to do is I'm actually going to go back over the one that I used in my Schwab video. So it doesn't really matter which risk tolerance questionnaire you use. This one's going to be with Schwab, but who cares? We're just going to kind of use it to figure out how much we need in stocks domestically, international stocks, and then how much we need in bonds. So let's go ahead quickly and let's take a look at that questionnaire. And now you're looking at this Charles Schwab questionnaire that you can go ahead and fill out for yourself. The link is in the description below. Please hit that and then fill it out. And what's going to do, it's going to help you figure out your asset allocation that's going to be right for you. And then we can use this to create a 3-fund portfolio. It's going to ask you pretty easy stuff like what's your time horizon. These are things only specific to you, right? So it's important that you understand what you yourself are going to want. So time horizon, risk tolerance questions to kind of determine what your risk should be. And then it's going to create an investor profile. And these are going to be based on the different amounts of points that you came out. And then you're going to fall into either conservative, moderate, moderately aggressive, or aggressive. And then from here, we're going to have to just kind of like tweak it a bit to turn this into a 3-fund portfolio, because it's not designed to create a 3-fund portfolio for you. It's just kind of designed to give you the different asset classes that you should be investing in and the different styles of investing. So let's take a quick look just at, for example, the moderate allocation. So the moderate allocation right here in the center. And what we'll do is we're going to say how much is in fixed income first. Okay, so that's this yellow one. So 35% is in fixed income. There's also some money in cash. So that's the blue. So 35% plus 5% is 40%. So essentially what this is telling you is that 40% of your portfolio, if you're going to create a 3-fund portfolio, you're going to add the cash and the fixed income. It's going to be 40%. So 40% is going to be in bonds. And so that's what you would put into your Fidelity bond ETF, or sorry, Fidelity bond index fund, which is in this one that we had here is the FXNAX. So if you had that one, then you would put it in there. So that would be 40%. Again, if you came back moderate. Now, let's go back. And now we have to figure out how much goes into international and then how much goes into just the domestic stock fund. So let's go with international first, because it's the easiest, because it just says it for you. So international is going to be 15% of your portfolio. So 15% is going to go into international. Again, you're going to add all that 15% into the Fidelity International Zero Fund. And then you're going to go over here again, and you're going to say how much is the both large cap, so the blue one, the light blue, which is 35%, and how much is the small cap, the 10%. So we're just going to add these together actually, and it's going to come back as 45% is going to go into the other just domestic stocks, okay? And so what this looks like is going to be this. And so looking at the pie chart, you can see everything we just talked about. So the FXNAX, Fidelity US Bond Index Fund, is 40%. The FNILX, the Fidelity Zero Large Cap Index Fund, is 45%. And FZILX, the Fidelity Zero International Index Fund, is 15%. And these are the different allocations. That's the pie chart. So that's what it would look like if you were moderate. Of course, if you were aggressive, it would be different. You would have more in stocks than in the bonds. Okay, so that's it. So that's how you do it. Go to the questionnaire, take a look, add up your cash and your bonds, add that all into bonds, add up your small cap and large cap, add that all into domestic equity, the FNILX, and then add the international into the international. So this is good for the 3-fund portfolio with Fidelity. Now let's look and see what happens if you're not with Fidelity. But let's say you want to create a 3-fund portfolio with Fidelity index funds with Charles Schwab, or if you have a Vanguard account or a TD Ameritrade account, whatever it is. So if you have one of those accounts, you can use some other different funds because you don't have access to the Fidelity Zero funds when you don't have a Fidelity account. So you can't use Fidelity Zero. That's why we have to find some other index funds for you. And so that's what these funds are going to look like here. And so here we have a Fidelity 3-fund portfolio investing in index funds that are not Fidelity as your broker. And really quick segue while we're here. I just want you to know that Fidelity does not have really ETFs that are going to be adequate for a great 3-fund portfolio. That's why I have not included any ETFs on this. It's all index funds. So, sorry about that, but no ETFs for the 3-fund portfolio. So let's go back here though and take a look at the index funds. So you can have the FXAIX, so that's the Fidelity 500 index fund, 0.015%. So that's the difference. It's got a very, very, very small expense ratio, but it's a little bit of an expense ratio. So maybe not quite as good as the Fidelity Zero fund because that one's literally free. This one does cost a very small amount. Then we have FTIHX, the Fidelity Total International Index Fund, 0.060%. So again, just a bit of percentage fee. And again, we have the same US bond index. So the FXNAX, it's the same as if you're with Fidelity or not. And so those are the 3 that you can use for this one. And then that's it. So I hope this really helped you. Remember, risk-adjusted returns are important, and that's why you go with a 3-fund portfolio, some of you. And if you like this video, please hit the like button. Let me know in the comments below what you're doing. If you're doing a 3-fund portfolio, doing something else, I'd love to hear from you. And on the end screen coming up, there's another video. I'd really appreciate it if you hit that coming up right now.